Okay, welcome. Happy New Year, everyone. Alright, so we'll get started for today's session over here. Very first session for the year. Right. So again, very quick introduction for those of you who are new to this, first time joining in. We run this every Monday, at this time, so 9:30 p.m. Based on Malaysia. And what we're gonna do is at the front part of this session, I'll run through some of the opportunities, my views of the market for the week. And then we'll look into some of the charts to share with you opportunities to keep an eye on, and then we'll open up a quick one for Q&A. And then from there on, we'll do a closing note, okay, to share with you some of the upcoming events that you might want to be taking note of, okay. And of course, if you're also based in Malaysia, that will be some physical events that we might have to. All right. So with that being said, let's get started for today's session over here. Okay, and of course, quick disclaimer: everything we cover in today's session here, it's based on educational purposes, and of course, trading involves risks. Okay, and just make sure you're aware of it. Okay, and if you need any financial advice, do consult the professionals, right? So good. Let's take a look at quick one over here for this week. Generally, this is the first week of a new year. Okay, so things are still gonna be a little bit quiet. You can see from Monday to today, to tomorrow, we do have a lot of holidays still. Okay, and on Wednesday, that's where the market is probably gonna start picking up a little bit faster. And we do have then on Thursday FOMC meeting, and then on Friday we have our very first NFP, average hourly earnings and unemployment rate for the year. Okay, so I think that might give us some activity on Friday, especially with the Canadian news as well as the US side of things. Okay, you can see over here, generally we're expecting the average hourly earnings to slow down a little bit to 0.4. NFP here we're expecting 200,000, and of course unemployment rate maintains 3.7. Again, whenever you're trading news, it's always important to consider the surprise element, right? So the actual data versus what was expected, that's usually the catalyst to move prices, right? So if you're someone who is looking at news trading, I think on Friday is definitely one that you can keep an eye on, okay? Because the Canadian data, as well as this kind of NFP data, usually has a bigger movement when there's a surprise, right? So that's something to note. Other than that, nothing much, right? So with that, let's take a look at a quick one on some of the charts over here. Okay, so we start off with the dollar index to give you an overview for this week. Generally when the dollar starts to consolidate quite a bit, okay, within a very tight range. Now with today's market, you can see that we are basically testing the previous bottom over here, potentially forming what we can see as a double bottom. Okay, of course it's not confirmed yet. We do want to see a strong rejection of that 103.40 to kind of give us that confirmation factor that yes, indeed this might be a double bottom. So if you are conservative and you would like to seek for more confirmation, my suggestion is to look out for 104.6. If the market can break off the 104.6, not only we are clearing this previous high, we are also looking at a break of this trend line over here. So that will give us a slight confirmation that perhaps the dollar is ready to reverse, and we can look for more upside with a target at 108. Okay, so alternatively, what you can consider to do is to maybe go down to a lower time frame, perhaps on the 30-minute chart, for example, and see if we can get a rejection following that, a fast mini impulse and a correction, and then that would also be a potential setup to look for the buy. Right? So depending, of course, on your trade style and your time frame of analysis, you can also consider a shorter time frame for an earlier entry, while the swing traders would probably be waiting at a higher price for the break to happen as a form of confirmation. Okay, so this is my view on the dollar. I think moving forward we can still see a little bit more strength in the DXY here, as long as this structure stays intact. Okay, So with that said, euro dollar would then be a little bit of the inverse side of things. Okay, we don't really have a double top yet that is forming on the euro, but there's a good possibility this would just continue to consolidate a little bit, maybe going into NFP on Friday to give us that little nice double top structure. And again, same principle, if we can get a rejection back down, that would be pretty decent sell if the market can break below 1.0605, okay, and your target here would be putting around 1.0220, which is back at this previous low. Okay, the same principle. What you can do is, if you're on a shorter time frame, you can consider and see if this can go back up, gives us a nice little rejection. Perhaps on the lower time frame, you can have another trend line over here, a break of that trend line following a consolidation. Okay, to get this combination of an impulse correction, that's where you can take that trade to the downside on the earlier, smaller time frame. So this is again something you can consider to keep an eye on for this week. Pound dollar over here is also building up quite neat. Okay, we do have this very tight consolidation. Again, for most of the past, a lot of consolidation between 1.2130 and 1.1990. This is more straightforward. Okay, so if we can get a decent break below this level here, we have a short-term sell trade. The risk reward may not be very attractive, okay, because if you kind of put in a trade that looks something like that, you can't get a 1:1.5. Okay, not something that is super attractive, but perhaps it's also a valid trade for some of you guys over here to be monitored. Okay, your target is somewhere around 1.1775. So this one here, I think will be a clearer setup than the euro, okay, because euro on a higher scale, like 4 hour, you probably need to give it more time. But for pound dollar over here on the 4 hour scale, it's already quite straightforward. Okay, for swing traders, I think pound dollar will be quite obvious. Okay, we look for the break to the downside. Aussie dollar over here is also doing a pretty neat impulse corrections. Okay, right now it's testing this top of the channel again, somewhere around 6800. Okay, what we want to see is that the market respect this high. This third time it came back to this channel top. We want to see the market respect this and continue to drop for us to maintain a bearish bias. Okay, if you are looking at a 4 hour scale perspective, a potential break below 6755, which is this low here, will give you that sell trade setup with a target and a stop above there. So if you put in the risk to reward ratio, this trade is pretty decent. From this scale here, you can get about 2.6, which is a solid risk to reward ratio trade. Again, you know, if you're more experienced, you can go down to like 30-minute time frame. Consider maybe a little bit of a double top on the 30-minute time frame. Look for a better entry around this break of the neckline. Your stop is above here. That kind of increases your risk to reward ratio as well. Okay, so again, it really boils back down to your trade plan and the strategy that you're using to execute the trade. Overall, okay, you can keep an eye on 6755, and then your stop would be somewhere around 6800, right? So that will be key. The price, ideally, we wouldn't want it to break above that, okay, to maintain that bearish bias as I mentioned. Okay, so generally we are looking at dollar strength. Most of this major pairs over here that you're observing, we are looking at buying the US dollar. Okay, same thing here for the Kiwi dollar. Pretty neat little correction here. We can't get a 1, 2, 3, and then we have correction that's developing. So we are expecting more downside over here, potentially coming back towards this level. Okay, for the Kiwi dollar. Let me change this a bit. That will put you around 6070. Okay, so your downside is pretty interesting. Not the best setup as of now. Perhaps this might pull back a little bit more towards that 50% fit. Okay, we kind of touch that depending on how, you know, how strict you are in that rule. But we did came very close, in fact, to that 50%. And the market kind of respected and rejected from there, right? So for Kiwi dollar over here, it's quite similar to the Aussie. Okay, a potential setup would be to look up around this breakout point of 6310, okay, or you want to be a little bit more conservative, you put it slightly lower, 6305, and the stop would then be at the recent high. Okay, so that will put you around 6375. Okay, so again, your risk reward is pretty decent on this. My personal suggestion, of course, is if you're trading the Aussie dollar, then you want to be cautious on the Kiwi because of the exposure here as well, right? I mean, these two currency pair are quite closely related. Okay, so just take note of that. The dollar Canadian over here, we're expecting more upside. Okay, so from an Elliott Wave perspective, we're seeing that this tree move may have completed. This may be what we call an expanding flat, and as long as the market is able to respect 3485, we can expect another three wave move to complete this bigger channel over here. Okay, so for now, as long as the market is able to maintain above 3485, and more importantly a very strong break above 3585, our intermediate target is around 1.3775. Okay, so we're looking to capitalize this move over here. Going down to maybe even on the lower time frame, you can see that we have this very nice little correction. Again, a strong break above this would be pretty decent. If you're conservative, my suggestion is wait for the break, wait for the pullback, then take the pullback trade. That will be, of course, safer because you actually wait for that confirmation to happen. Okay, and of course, looking at dollar Canadian, you can also time in a little bit in terms of your execution with the Friday Canadian data. Okay, because we know that news often creates that bigger move. Okay, so you might want to also be timing that together. Okay, so that's on the dollar CAD. We're looking for upside. Dollar franc here is also pretty neat. We kind of have a little bit of a double bottom that is forming now. We have this structure over here that has been building up for some time. Okay, so this is what we call a crawl, or you can look at it from a diagonal perspective. You have this very fast drop, and then after that it slow down. Often this kind of suggests a potential reversal with a potential target back at this little high. Okay, so that's the idea of this trade. Building in that, the case of looking for this. So somewhere around 9595 would be a good target to aim for. What you want to consider is perhaps a breakout point for confirmation too, right? So that will give you around 9270. Right. What you can do, of course, you save me down a bit here. You can go down to a lower time frame, wait for the break, wait for that retest, take that trade from this retest. Again, there are many ways to pull your execution. At the end of the day, I think need to be comfortable, right, with the method that you're using to execute and enter on trades. Okay, so a breakout point around 9270 will be great. Stops can be placed just below this recent low, which would give you around 9195. Okay, and your target you can aim for 9595. Okay. So generally all these are looking for dollar strength. Okay, if you're looking to trade these majors, just be aware of that risk exposure. Okay, because if the dollar have go against you, then all of this trade here may at the same time move against your trade direction. Okay, so just be aware of that risk aspect. Good. Let's cover a little bit in terms of the gold chart here as well. Okay, so gold is developing as a crawl, or what we call a diagonal as of now. There's not much of a confirmation to sell at this moment, but this big pattern here suggests that you do not want to be you do not want to be buying yet. Okay, unless you can't get a bigger pullback here that will give you that buy setup. But as of now, it's actually more interesting to look for the sell, right? Because of this bigger pattern developing, the probability to the downside is higher. One way to look at it is to wait for a decent break below 1812, ideally something like that, and then a decent pullback here. This here will give us that confirmation, right? Especially if you can break below this little trend line and consolidate below it. this will increase the probability to the downside significantly. Okay, so if you are conservative, okay, just wait for that to set up. Alternatively, what can happen is this can still develop in a very, very slow fashion to give us that little double top around 1833 before that big rejection. Okay, so you just want to keep an eye on that, right? Gold, you need to monitor it to see how the market develops moving forward from here. Okay, so this can, of course, as I mentioned, just do a very, very slow move and keep doing something like this. Then you have a breakout point, your stop loss above it on a lower scale. Yeah, so gold here, just keep an eye on it. If this continue to develop in a very, very corrective manner, we have that decent sell trade to the downside. Okay. S&P. Okay, we'll touch a little bit on crude oil first. Okay, crude oil, this is what I'm seeing. Okay, quite similar in terms of the structure that we're seeing on the dollar Canadian. Okay, we do have this as a 1, 2, 3. I'm expecting a bit of a pullback here. Okay, potentially forming a bigger one, coming close to that bottom of the channel, and then we can expect another 1, 2, 3, right? So overall, we are looking at a bullish perspective, but short-term wise, it might develop into a 3-wave correction. That's the reason why I would say we hold a neutral for now. Give it some time and see if we can pull back better, giving us a very clear structure, and then we'll look for another buy opportunity on crude oil. Okay. S&P over here, last year has concluded. S&P is a down year as of 2022. So this year here, things are gonna be a little bit more interesting. Okay. To me, my perspective over here is for the first half of 2023, equities are gonna probably continue to struggle a little bit, but start to show sign of a potential bounce. And ideally, by the second half of 2023, we're gonna see equities market starting to come back in, right? Which means we're gonna probably see equities starting to boom a little bit at the second half of 2023. Okay, but of course, a lot of this depends on how the macro environment evolve. Okay, so from a technical perspective, S&P as of now, there are two main possibilities of how this can develop into. Either this continue to consolidate and form something like that, and then we'll continue to see a bigger consolidation after it. This would take way longer, right? So it'll probably build up into maybe end of Jan. Okay, that's one possibility. If that's the case, it's going to be a little bit challenging to be trading it, to be honest. The alternative is actually easier to see is if the market breaks above this structure and starts to go higher towards 3918 as of now, then we have a slight change in structure, and we're going to get something like this where we can then start to look for sell opportunity around 3918, okay, maybe towards the end of the month. So this will be clearer, so it gives us that 1, 2, 3. Okay. So right now, we still need more information to see how the price is going to develop. If we can get a pushback towards 3918 and the rejection from there, we'll look for a sell. If this cannot break this trend line and it just continue to move lower, doing something like this, we'll need to be even more patient because this suggests an upside. Of course, you can trade the counter trend, but my expectation here is this will probably develop into just a corrective structure, and we'll still look for the next move downside after that. Okay, so S&P here, we really need to monitor how the price is going to develop from here on. Okay, yeah, so that's the general market. In terms of crypto over here, Bitcoin specifically, it's quite similar to S&P chart in terms of the pattern that is developing. Okay, you can see over here we have a fast drop, and then this comes down very slow. So ideally, this would probably turn out into another push short term, another push up, and then another move to the downside after that. Okay, so if you're into like Bitcoin, this is the Bitcoin futures chart. Okay, so if you're into Bitcoin, my suggestion here is to keep watch of 17,100 level. Okay, keep an eye on how the market is going to react when it reaches this zone. Okay, because you might get a rejection, and you can then focus on the sell with a potential target back at 14,900 level, which is this low here, right? So that kind of gives you an impulse drop a 3-wave expanding flat correction, and then you get another move to complete that 1, 2, 3. And if you're looking for long-term accumulation of Bitcoin, perhaps around 14,900 level, the bigger double bottom will be a good area to look for accumulation. If you're trading, focus on 17100 for a potential sell. Okay, so that's on the crypto side of things, right? On Bitcoin. Good. Okay, so that's a quick one for the overall market for this week. Some of the things that I'm looking at as well. Okay, good. So we'll open up the remaining time a little bit over here for Q&A. Okay, so if you have any questions, feel free to put it into the chat box. Then I'll look at the questions and answer you accordingly. Okay, any questions, guys? All good? No questions? Alright. If all is good, then we'll do a quick closing note over here. Okay. Oh, I see a question, right? So let me address that first. Question on gold, I think we talked about it already. Okay. Then we have another question about any chance the yen will strengthen. I think today we didn't really touch on the yen. Just because for me right now it's not the best time to be, I mean this week, okay, it's not the best time to be looking at the yen. Okay, so we can't have quite a big volatile move in the yen just as of the end of 2022. We get a pretty impulsive drop, and then we get a pretty strong pullback, and then of course the drop is also equally fast. Okay, it's really because of the recent changes in the BOJ policy, okay, creating that kind of volatility over here. To me, right now is not the best time, is because if you look at dollar yen, right, we're essentially back at its previous bottom around 103.60. My suggestion, of course, is while we overall maintain a bearish bias for mainly the yen, you don't want to be selling at previous structure level here, right? You want to at least wait for the break, wait for the pullback. You have a decent consolidation. This would be a much higher probability trade as compared like trying to sell it here. Okay. Again, there's no reason to buy now as well, because this is coming down pretty fast. You do not want to buy in, as what we say, right? You don't buy into a falling knife. Okay. So for me this week, okay, I think you just stay clear of the yen first. I think most of the yen pairs you can see are more or less similar, right? Just stay clear of it, give it some time. Maybe next week or even the following week, we might get something on the yen. Okay. In terms of like for the year, okay, it's quite difficult to say, right? For especially on FX, because things can really evolve very, very fast. Okay. So I wouldn't like to give, in terms of like too long a time frame for FX market, because what I say today right now may have changed maybe 2 weeks later on, okay, because of how the global macro environment might shift in the FX scene. Okay, and this year, to be honest, 2023 is really what we call a shifting phase. So what I mean by that is you can take a look like what happened in 2020. The whole environment shifted, right, from like a normal economy into a lockdown economy. We have a shift, okay, and we saw that in most of the major central banks' policy as well, right? From a typical kind of like environment, and then suddenly everyone goes into easing policy. So that's a shift. And then last year, beginning of 2022 late 2021, we saw another shift, right? So we saw like inflation hitting in, and then every major banks are basically doing a tightening policy. Okay, this year, based on the current trajectory, that's where we're gonna see another shift, right? So from a tightening policy, with inflation starting to come down a little bit, this year we might see a shift from tightening back to maybe easing policy, because once inflation is done, the next topic that people would have in their mind is recession. Okay, and when we are facing in a recession environment, banks would then start to talk about easing policy. Okay, so when we are in this kind of environment, when we face with such macro shift, okay, especially in the FX world, things can change pretty quickly, right? So we can see like dollar strengthening as of maybe like now, based on my trajectory. Maybe 2 months, 3 months down the road, we might be having a fundamental bearish dollar view. Right? So I wouldn't want to hold on to a very, very long-term view on the currency market. Okay, so even if you take a look like weekly scale of charts, okay, how low can this move? Of course, you can take a reference on like FIB. 50% mark as of the dollar yen chart comes pretty nice with the previous structure level. Okay, so maybe dollar yen may drop a little bit more towards like 124 to 126 area. That can be possible, right? But for me, when I'm looking at FX market, I'm looking at swing trades, okay, mainly on a 4-hour scale. I trade according to what I see on 4-hour chart. Yeah, so I hope that can give you a bit of understanding from there. Okay. Oh, I see another question over here asking, is there any chance that 22.3 will also become like 22.1? Any specific details that you're referencing to like in 22.1? Okay, because if you're talking about stock market, actually 22.1 is not like the, you can say it's a good year for the stock market, but I think 2020 is like the starting phase of the bull run for a massive quick run to the upside for the equities, right? If you are referring to that, I think 22.3 may not be so straightforward. But 22.3 might be the start of that bottoming, okay, if you're talking about equities market. But you still need to keep look, right, as I mentioned, in terms of that shift in the macro environment. How fast that macro environment changes will also impact, okay, in terms of the market over here. But 22.3 is definitely a year that will see some shift. Okay, it's just a matter of like when. Is it gonna be early 22.3, midway of 22.3, or maybe end of 22.3? Okay, but there's a very good possibility we're gonna see that shift happening within this year itself. Good. Yeah. I see another question here. Does the Fed have to increase interest rate higher than inflation to effectively bring down inflation? Not necessary, but I think I've shared this in some of the previous sharings as well. Okay, there's this historical study that suggests that if the inflation has hit more than 5%, the interest rate and inflation has this relationship. Okay, so right now what we know is that interest rate is somewhere around 4 point something. Okay, so I'll put it as 4%. Inflation is about 7 point something, so I'll put it as 7%. There is this study that state that as of now, inflation is starting to drop, interest rate is still rising. Okay, so this will probably continue to rise all the way perhaps to about 5 point something as of this year, and this will continue to drop maybe towards 6 and then towards 5. Okay, at one point in time, the interest rate and the inflation data will intersect. Okay, they will cross one another. At that point in time when they intersect, there's a good possibility that we will see the peak of interest rate. Okay, and when that happens, it peaks, means maybe it will gonna stay there for some time, and then it starts to drop after it. Okay, so that's the shift that I'm talking about. Okay, right now interest rate is going up. At one point in time, it will probably peak. This peak here, depending on how long before it's gonna drop. Okay, it might be maybe just a very short term and then it drops. It can be a prolonged period before it drops. But in any case, this part here is where we are talking about that shift. Okay, so this is probably something that you want to really be monitoring in 22.3, and when that happens, that's where the opportunity starts to come in. Okay. Okay, so I see here another question. What are the chances of a soft landing happening in 22.3 as the Fed said that they would try to do? The definition of soft landing is not a very specific kind of definition as well, okay? So, like, maybe, a soft landing is like not a huge, very bad recession, okay? But at the same time, the Fed will also say something like this before, okay? They say that they will forego recession. That means they will allow recession to happen in order to fight inflation. So I think the focus here is not so much about whether are we going to get a hard landing or a soft landing, but you want to monitor in terms of how the interest rate is gonna shift from this year onwards. Okay, I mean we're likely still gonna see a few hikes, but what happens next, right? I think that's gonna impact the market quite significantly moving forward. Okay, so if the Fed says we're gonna, just like I mentioned about the peak, okay, so if that peak is gonna stay for some time, then it's not gonna be a very fast shift, okay, because this takes time. But if that peak is just for a while and then it starts to drop, this is where that major opportunity is gonna come, right? We're gonna see a lot of major move that's gonna happen in the market. Okay, so this will give you more exciting times to be trading or even investing. This scenario will give you a little bit more of a lag, right? Because during this period here, there's that kind of uncertainty. Okay, so that's something I think what I'll be focusing on. In terms of like hard landing, soft landing, we're talking about if it's recession. It's not something that I would say would be too much of a concern to me as a trader. Okay, but of course, if you're talking about economy, then that would have a major impact in the economy, right? I mean, if it's a hard landing, more people would suffer. We'll see perhaps unemployment rate shooting up faster and things like this. But again, as a trader, that is just one minor contributing factor to the macro environment of the financial market. Okay, hopefully that kind of also makes sense, right? So that's where my perspective coming from. Yeah, good. Okay, so coming back to this, just now I wanted to do this closing note, right? So very quickly over here, just to share with you some of the current offers and promotions that Zenfinix have. Okay, and then I'll share with you some of the upcoming events that we're gonna have as well. Okay, so if you're interested in those events, then you can take note of the dates. Okay. So quick one over here, together with Zenfinix, right now if you decide to register and open an account with them, okay, verify your account, make a deposit $100, you're gonna get $88 credit. Okay, if you deposit 200, you're gonna get 96, and if you put in a $500 credit, $500 deposit, you're gonna get $140 credit bonus. Okay, so this one here, if you're interested to find out a little bit more, you have perhaps some questions with regards to Zenfinix as a broker, feel free to reach out to them directly. Okay, so if you're on Zoom, okay, they will be posting up a link, a WhatsApp link, so you can actually click on the WhatsApp link and then inquiry about it. If you're watching this session right now on YouTube, we also have a link, a WhatsApp link in the description below this video. Feel free to click it. It will direct you to Zenfinix support WhatsApp. Okay, so any questions with regards to that, feel free to reach out to them. So that's the one. The second that we are running right now is a Telegram channel. Okay, so this QR code, what you need to do is just scan this. It will direct you to the Telegram channel. Okay, and inside this Telegram channel, every day we'll post up a chart to share with you, the overall outlook for that day, as well as some trading opportunities that I'm identifying for the particular day, right? So this is called daily dose, so 1 day, 1 chart. On top of that, inside this channel, if we have any announcement, any events that's upcoming, we also post it up into the channel. Okay, so you can keep yourself updated on it as well. Good. Okay, last but not least, let me show you where is it? Last but not least, we have this upcoming event. This is happening in KL, Kuala Lumpur in Malaysia. Okay, so if you're watching today's session in Malaysia, you're based in KL, then we are having this traders dinner and networking session on the 11th of Jan, which is next Wednesday. It's gonna be dinner time. Okay, and this event is fully sponsored by Zenfinix. Okay, it means you can come for free. Okay, if you're here. But one thing to note is that there are limited seats due to the cafe, the dinner place. Okay, so make sure you need to RSVP. Okay, you can't just like suddenly pop up on that day. So if you want to come, again, reach out to Zenfinix team. Same WhatsApp link. Just click on the WhatsApp link. It will direct you to there. You can ask for more details and information about this particular event. Okay. Of course, over here, priorities will be given to existing Zenfinix client. If you're very new with Zenfinix, okay, you do not have a trading account with them yet, you're not a client with them, you can still inquiry with this. Okay, if there are still slots available, you can still join it. Okay, so what's gonna happen is we're gonna have some casual dinner, and then after that, you can network with fellow traders. I'll be there. You can of course ask questions, can build friendships, get to know people, and then of course we'll also do some casual sharing about markets and things like that. Okay, so it should be fun. This is something that we're doing for the first time. Okay, so let's see how it goes, right? Cool. So this is a quick update over here. Okay, for those of you who are interested, feel free to again click on the link, find out a little bit more. Cool. So that's all from me for today. Okay, all the best for the new year. Don't rush into things. I think this week things are still probably gonna be a little bit slow. It's building up that momentum going into the new year. Yeah, so don't rush things through, but things should start to pick up some pace as of this week onwards. Okay, then I think next week onwards, things should be going back to normal. Okay, and trading as usual. Yeah. Okay, good. So all the best to you, and of course, Happy New Year. Okay, still, and I'll see you guys in the next session. Okay,